All right, let's look at the straight line method. Now, whether you know it or not, we've actually already used this formula. The straight line method for calculating depreciation expense. And this gives us annual depreciation expense. So your formula is cost minus salvage value over the asset's estimated useful life. Okay, so let's break down each one of those items. All right, cost. This is that initial cost, right? It's what we've calculated in the last few videos. We talked about it needs to be all the expenses, all the items that we had to pay in order to acquire it and get that asset ready for its use. Okay, let's look at salvage value. Salvage value, another name for that is residual value. Okay, basically it means the value, the estimated value of the asset at the end of its life, of its useful life. Right? So you can think of it as like Kelly Blue Book, right? Where we have a car and maybe we've used it for 5 years and we think we'll be able to sell it for a certain amount. That's the residual or salvage value. All right, and then finally we have the estimated useful life. For the straight line, it's the amount of time. It's usually expressed in years. The company expects to use the asset, in its operations. Right? It's not the amount of time we think the asset will survive or live, right? Maybe that company car can actually be used for 20 years before it completely falls apart, right? But maybe the company has a policy of only using vehicles for 5 years and then replacing them. So it's not the total life, of the asset period, it's the amount of life the company is going to use it for. Okay, so that can vary. Again, a vehicle might last for 20 years, but we're going to replace it after 5. So 5 would be the useful life for the calculation. All right, in homework problems, they have to give you the cost, the salvage value, and the estimated useful life. They have to give you those 3 items. Otherwise, you wouldn't be able to calculate depreciation. Okay, one more thing I want to mention. Cost minus salvage value, sometimes that's referred to as depreciable cost or the depreciable base. Okay, so another way of writing this formula would be depreciable cost over the estimated useful life. Just want you to have that in case the homework problem says depreciable cost instead of cost minus salvage value. Now you know what it is. All right, so there's your formula. We'll work through an example in the next video.